Thank you for your patience. We've just had a few people signing in a little bit later than scheduled, so we just wanted to give them and as many people a chance to log in as possible. So today we're joined by Fluent Finance Abroad and a representative, Marc, who's going to explain a little bit about Spanish mortgages and how it all works. So if you do have any questions, please feel free to type them in the chat and we'll go over any questions towards the end. Your microphones will stay muted just because we are recording, and if you do want to watch this session, and in fact any of our previous sessions, please feel free to log into our YouTube channel, Ideal Homes International, and you can see all the recordings there. So, Marc, if you want to just explain a little bit about yourself, a little bit about the company, and then we'll dig straight in.
Okay, thanks a lot, Ben. Good afternoon, everyone. Welcome to the webinar. Very nice to virtually meet you all. As Ben said, my name is Marc Elliot. I own the company Fluent Finance Abroad. We're a Spanish mortgage specialist, and we have been operational in Spain since 2006. So we've been here for quite some time. Me personally, I'm a qualified mortgage broker from the UK. I worked for companies like Scottish Widows, John Charco in London. But I'm actually half Spanish, and therefore I'm fluent in the language, and was brought to Spain in 2004 to dedicate or to understand the Spanish mortgage market and be able to translate that to foreign buyers who were thinking of purchasing a property in Spain but using Spanish mortgage finance to do that. So that was back in 2004, and I'm very proud to say that we managed that we're still here. I'm still here, and the company's grown to what we are now. That's no mean feat, because obviously we lived through the credit crisis back in 2008, 2009, up to 2012, and we're now going through the coronavirus crisis, which isn't as bad as it was back in 2008. We're an independent mortgage consultancy. That basically means we have access to every single lender that is active in the non-resident market here in Spain. So our job really is to use our experience, our knowledge, and our contacts to advise clients as if we were them. So we would speak to a client, we would understand what they were looking at achieving, what was the pros, do a SWOT analysis, if you like, of their mortgage application, and then put ourselves into their shoes and recommend a solution, a mortgage solution, as to what they should go for, what they should expect. I'm available to take any questions off the cuff. So if anyone is thinking or has anything that they want to specifically discuss with me, then I've got absolutely no problems at all in answering those. In fact, you could actually help me out with something to talk about. But I'll go through some very, very basics with you all. I'm assuming that most of the attendees are from the UK, so I'm going to be a bit Brexit specific with how Spanish banks or Spanish lenders are viewing applications from British applicants at the moment, which is, I think, quite important, because Brexit is definitely happening, and so therefore Spanish banks are putting things into place to maneuver themselves as to a potential consequences or impact of what Brexit and the negotiations will be. So the first thing that we need to be aware of, on the internet and such, you will see advertised quite regularly that 70% loan to value or loan to purchase is readily available for non-residents. And that is true, or that was true, and that was before Brexit. But now Spanish banks are actually, for British applicants, are lowering their loan to value to 60%. That is on average. For a very strong application, there are Spanish banks that will go to the 65 or 70%, but we have to work on a general rule of thumb. And the average now for a British applicant, it's best to do initial figures on 60%, which is which is direct consequences of Britain leaving the European Union, and is deemed as a higher risk in terms of the legalities between the two jurisdictions. Okay, so that's the first thing that needs to be addressed. 70% is no longer given. 60% is really where we need to be aiming for. A lot of the banks now will only give mortgages for a maximum term of 20 years. Okay, that's again, these are, I'm just not being specific, and I can't give the criteria of every single lender, but the general rule of thumb is if you're calculating what your Spanish mortgage should be, you should be doing it over 20 years rather than anything longer, like 25 or 30 years. What's the implications of that? Well, a 20-year mortgage on a capital repayment basis would mean that it would cost more on a monthly basis. Okay, interest only is not available in Spain anymore, so everything is done on a capital and interest basis. So yeah, so if you're doing calculations on and trying to work out what the monthly cost would be, you should always do it over 20 years. The next thing that we really need to consider is that a maximum age. Okay, so if you're close to retirement, you're 60 years old, for example, most Spanish banks will go to the age of 75 years as a maximum, okay, which is still quite long compared to the UK. But if you're applying for a mortgage at the age of 60, the maximum term you can get is 15 years in general. Again, there are kind of ways around that. We can potentially bring in family members to extend the term, if that's what you wanted to do, to make sure that the monthly payments were lower. But again, it's all reviewed on a case-by-case basis. I'm just trying to think of what else would there. In terms of interest rates, well, interest rates are pretty good still. There's no real threat of interest rates going up. But as a rule of thumb now, we are calculating on average our affordabilities at around about 2%. 2%, which is pretty good for a non-resident. We can obtain lower than that. We have negotiated white label exclusive with certain lenders, but whilst we're doing basic numbers with clients initially, we always work on 2%. I don't know if any of you are interested in or do you have had any other experiences with lenders, but that's what we're doing on a daily basis. Ben, do you have any questions?
Yes, we have had a few questions come in.
Okay.
One of them being, what is the early settlement fee, just as a general? If somebody wanted a 60% mortgage over 20 years, on a 20-year term, would there be a penalty if they wanted to settle the mortgage after, say, 10 years?
Right, you've got two options. You've got the flexible variable rates, the interest rate trackers, and those carry very minimal redemption penalties. The law changed in June last year, where early redemption penalties are now 100% regulated and governed by the new regulations. So it works like this. If you had a variable rate mortgage, you have two choices. If you can pay 0.15% for the first 5 years on whatever amount that you repay, or you have the choice of paying a slightly higher amount of 0.25% in the first 3 years. Now, if we use 100,000 just to make the sums easy, if you paid 100,000 off or cancelled the mortgage or paid 100,000 off, then if you chose the first option, the 5-year option, you'd have to pay 150 euros to cancel or to pay off. If you went for the 3-year option, it'd be 250 euros. So pretty cheap to cancel on a variable rate, flexible deal, right? If you chose a fixed rate, the law states that the bank cannot charge you more than 2% to cancel or pay off lump sum. So, and that's for the first, let's say you took a 20-year mortgage they can only charge you 2% in the first 10 years, the first half of the mortgage. After that, it reduces down to 1.5. So redemption fees aren't brutal, not like in the UK where if you get a 5-year fixed rate and you cancel within the 5 years or you pay the mortgages off, the redemption penalties can be 3 or 4 or 5%. So they're quite flexible in Spain, which is quite good. If you're thinking of getting a mortgage now because the interest rate, the exchange rate isn't so great from sterling to euro, with the idea that sterling will recover in 2 or 3 years' time, once we know where we are with Brexit and stuff like that, then it might be worth your while considering a variable mortgage because you are completely free to cancel at any time and your redemption penalties are extremely low.
Okay, great. The question that's just come in fact, let me just cover this one. Can you tie a pension in as a guarantee for the loan? In other words, what can you actually take into consideration when applying for a mortgage, other than maybe your
sorry, what do you mean? An actual pension income?
Yes, a pension income as part of to guarantee a loan.
Okay, sorry, I misunderstood.
No problem.
That's something else. No, yes, of course you can use your pension income. No problem at all. As long as your age is at a level where the term is long enough. Any income that you receive, which is declared on your tax return or whatever, it can be used. So if you're a retired police officer, for example, quite pertinent, who retired at 50 or 55, and you've got a police pension but still working, we can still take into account your final salary pension. No problem. So as long as the income that you receive is declared and you're paying tax on it, it can all be included in the affordability, and that goes for as well any investment income that you receive, rental income, whatever income that is on your tax return can be used. Absolutely no problem.
Okay, great. When going for a mortgage, would a bank do the valuations on the property, or will this be down to the clients to arrange? And if the bank will do it or the client does it, what would be the cost?
Okay. In order for a mortgage contract to be valid, it has to have what we call in Spain an eco valuation. An eco valuation is a Bank of Spain regulated valuation. It's a legal document, and it's governed by the eco law 850 eco whatever. And for a mortgage contract to be valid, it has to have one of those. And for the valuation company that undertakes that has to be a recognised and registered Bank of Spain valuation company. So that it's very important. The banks will have a list of preferred valuers, which they will always encourage you to use, because I guess they have a bit more control over that. Over them, but that you are not obliged to use the bank's preferred valuation company. You have every right to use your own, as long as it is a eco-registered valuation from a Bank of Spain regulated valuation company. And there's quite a few out there, so it's worth getting an independent valuation. We have a list of. We've worked with valuers and valuation companies for 15 years, so it's actually very good now that the law has changed. Whereas before, the bank would control that side of it a bit more. They're not. You're more free now to pick your own. The bank have the right to get a second opinion.
Good. So if, let's say, you mentioned a SWOT analysis, if you can also sort of go into a little bit more detail as to what a SWOT analysis is, and also if somebody just applied to you for a mortgage, what would be the basic steps that they will need to bear in mind? What type of paperwork will they need to have ready, and how long does the whole procedure take?
Okay, well, so basically, when a client comes to us, we would ask them certain questions and go through what we call and what people in the UK call is a fact find. So we would ask certain questions: how old you are, how much liquid funds do you have, what assets do you hold, do you have buy-to-let portfolios, What do you do for a living? What's your gross and net income? What outgoings? All the basic general stuff that you would expect a mortgage broker or a mortgage consultant to go through with you if you were to apply for a mortgage in the UK. Basic affordability understanding. We have agreements with all the lenders. We understand their criteria. When you come to someone like us, you're not just talking to one lender, you're talking to the whole network that are out there. So whilst we're talking to you and we're asking questions, we're constantly thinking, okay, well, how are we going to best place? Right? So, but we need to know, it's a bit like baking a cake, Ben. I need to know, and you come here and you say, I really want you to bake me a really nice cake, and I say, okay, well, tell me what ingredients have you got for me to, and then from there I'll be able to tell you what kind of cake I'll be able to make. That's pretty much it. So we would go into depth as to the strengths and weaknesses. What we say the strengths and weaknesses of your potential application, and then we would then sort of say, okay, well, we understand the situation, and we have calculated that this purchase price would be your maximum, and this mortgage would be the optimum mortgage that we believe that you should be applying for. And that whole process for us to really understand, are you talking about from beginning to completion? Or are you talking about from the moment we first speak to getting an agreement in principle? Because it's
both.
Well, from having a quick discussion within 10, 15, 20 minutes, I'll be able to understand pretty quickly whether or not a mortgage is achievable or not. Then we would need to discuss about what documentation you would need. So let's talk about the documentation. If you're employed, it's very straightforward. You know, the last two P60s, a letter from your employer, 3 to 6 months bank statements, credit report, kind of thing. If you're self-employed, very important that we have 2 years worth of tax declarations, a letter from your accountant with potentially a projected earnings, if your earnings for the upcoming year are going to be better than the previous earnings. And then just we would like to see a last set of company accounts, although those can be obtained from company's house. And then again, the usual stuff: credit report, bank statements, and proof of deposit. Proof of deposit is always good. So it's very important for us to know if the deposit's going to come. If it's sitting in savings, that's great, that's fine. But if you're going to drag it out of a property that you may have, or equity release from a buy-to-let property, then it's very important that as a broker, we know this, because certain banks aren't too keen on that over here. And you need to know which banks how to approach that. Because certain banks over here are very traditional. They want to say, well, if they haven't been able to save from the regular savings, then they may not consider that as a positive, whereas some banks wouldn't care or actually look at it as a positive. So that's the general rule of thumb in terms of documentation. So when we've got all those documents in, we then submit it, farm it out to the lenders. Some lenders will come back with an agreement in principle quickly, generally 3 or 4 days. Other lenders may be a little bit longer, can be up to 10 days. After that, it's just a case of picking which mortgage you wish to go for, and then we start the process with the evaluation. We would also want to, at the beginning, go through the property details, just to see that everything is correct with the property, i.e. the nota simple, so that we're not going to have any surprises with the valuation. But in general, very general rule of thumb, you really need to be looking at, from beginning to end, 6 to 8 weeks all in. Then you'll have the keys in your hand. There's other things that that are out of our control. For example, if there is a bit of an issue with the property in terms of how it's registered, for example, on the land registry, that needs to be sorted out. And that's why we always recommend that you get an independent lawyer to look into those things, and also things like bank holidays, or that type of stuff, or people that are on their annual holiday or something like that. There's certain things that we cannot control that may delay. We sometimes get delays because vendors are living in Germany or or a different country and can't get into Spain at that certain time because they've got power of attorney or things like that. Those things. But if everything goes through smoothly, 6 to 8 weeks is absolutely fine.
Great. Just as a ballpark figure, I know you can't be too exact because every circumstance will have its own issues, but no, that's brilliant.
Okay.
So what does a valuation cost? How much roughly, just on general, is a valuation cost? And also to use your services, what fees sort of come on board with that?
Okay, well, for evaluation, you should generally, it goes on a sliding scale, but let's just do one, 250,000 euro property. You shouldn't really be paying more than 450 euros for that. But what you do get for that is a real valuation. It's not just a drive-by that you may get in the UK. You actually get a 60-page or 70-page detailed valuation for that money, along with pictures and plans. So it's quite a detailed document. It has to be because it has to go into the actual mortgage contract. In terms of how much it costs to employ us, we feel that we're very good value for money, and we always negotiate our broker fees, our consultancy fees with clients before any serious work gets done. The initial consultation that we have with clients and the initial study is always free. And so therefore, and we put our proposal in writing so the client can go away and decide whether or not it's something for them. But in general, our minimum fee is 1,600 euros, all in, there's no IVA. And then we can charge up to 1% of the loan amount, dependent on the strength or weaknesses of the case that we have here. But like I say, we always discuss this up front and put it in writing. And all clients have to be happy with that before we take a case.
Great. And in terms of, let's say, for instance, a client goes for a mortgage, the date being the 8th of July, what sort of interest rates can one expect at this time?
Well, if you're looking at interest rates is complicated because you will see a lot of headline rates which seem really attractive if you go on bank websites. You walk past the shop window and stuff. But we always ask clients to please read the small print. In Spain, I don't know, but they're very keen on selling additional products, and that needs to be factored in. If you want a straightforward mortgage, no complications, no life insurance, no payment protection, PPI, you don't want an alarm sold to you by the bank, then you should be really looking at a 2%, slightly lower. We can get, you might see on a bank's window, I don't know, come to us and we'll get you a mortgage at 1.5 as a non-resident. Sounds amazing, but when you actually speak to them, they say, well, you've got to, in order to qualify for that 1.5, you have to take life insurance. And then when you factor in, well, how much is the life insurance going to cost me? Well, that's going to cost you 80 euros a month each. Okay, well, that's okay. So what happens if I didn't take the life insurance? Well, we would increase your mortgage by 0.5 points, the spread on your mortgage. So it's not 1.5 now, is it? No, it's 2%. Okay, fine. So what else do I need? Well, there's home insurance. Okay, so what's the implications if I don't take the life insurance? Well, it goes up by 12.2. See, all of these little things that they throw in, we try and eliminate, right? So I can sit here and say I can get you a Euribor plus 1.1 spread, which sounds amazing, but when you look into detail and you add on all the extras, then the actual the actual annual percentage rate, the APR, instead of being 1.1, actually ends up being close to 3, which is a disaster because you've already signed up and everything else like that. So in terms of straightforward financing with a no-nonsense mortgage, you should be looking at 2%, all right, with no complication. on fixed rates, again, with no complications, with no additional products, which I will recommend anyone really to get because they are expensive with the banks, you should be looking at 3%.
Okay, okay. So things like insurances, various types of insurances, life insurance and even home insurance, is that mandatory in order to obtain a mortgage?
The only thing that we would recommend that you would take with a bank is their home insurance, because we've done studies and such. I mean, we work with insurance companies as well. And when you do a like-for-like comparison, the bank may be €20 more expensive a year, which isn't much. And, the bank have an interest in making sure that the property is properly insured. So the insurance that you're going to get is going to be pretty decent. Things like life insurance for a non-resident, do you need it? Probably not. You've probably got adequate life insurance yourself back home from your job or whatever. I know in the UK, it's probably about 70 times less expensive to get an insurance product in the UK than it is in Spain. I know I live in Spain and I've got life insurance and it's expensive. So do you need life insurance? No. Certainly don't, and they can't oblige you to take any insurance at all. It's not. They can try and encourage you by offering you discounts, and this is where they missell it. I'm going to be blunt; they just missell it basically. So they show you how low your rate could be with the additional products, and they try and focus on that, but they never show you what the APR is, and that's where they get. That's the most important thing. It's called the TAE, the Tasa Anual Equivalente, which is the APR, and that's really what you need to be focusing on. Yeah, it all looks good at 1.5%, but if my APR is 3.5%, something's not quite right here. But no, they can't fault you.
So and obviously, sort of looking into this and obviously knowing your company, what you do and what you specialize in doing is demystifying the whole thing and kind of sifting through the rubbish and kind of giving it, as you have done, point blank. This is what it is. This is what it should be, with no attachments, no add-ons. There's no fluff, and the percentage shown is the percentage from yourselves of what you think is going to be completely adequate for just the mortgage. No packages or anything else sewn on top of that as well.
Well, no, I mean, don't forget, I speak fluent Spanish and I can read Spanish. I've done the Spanish mortgage exam, so I've demonstrated, and I've been there for a very long time, 15 years, involved in this business and in this market. So I'd like to think I do know what I'm talking about, and I have demonstrated that I do know what I'm talking about. So we have the skills and the knowledge and the expertise to look into this in detail and to explain it in detail. And don't forget, as a broker, you don't work for the bank. You work for the client that pays you. And that's why it's important that clients understand the difference between brokers that don't charge a very small amount to brokers that, like us, who would actually charge what we think is a fair amount for the work that we do, because we would actually, I would sign the mortgage. If I put a mortgage in front of you and I said, this is what I think you should go for, it means that I would sign it myself if I was in your situation. Do you understand? Am I making myself clear as to what
you're kind of putting your if it's not good enough for you, then you wouldn't recommend it to anyone else, which is
exactly, because I've done my homework. I know exactly what it is, and I can show you, because now by law we have to show that we've been to more than one bank. That's the rule. You've got to be able to show that you've been to various different banks. What we do is we have a term sheet of all the different offers from all the different banks, and we can back up with all the email correspondence, and we'd say, right, okay, well, Santander has offered you this, Mr. Client. Bankia has offered you this, Mr. Client. Sabadell's offered you this, but we recommend that you go with Bank Inter, and these are the reasons why. And it's there in black and white, and then no one can really argue with that. And that's a lot of work. It's a lot of detail that you have to go into, and you don't just wake up one morning, become an expert in Spanish mortgages. That is, we've spent a long time studying this market, And we spent a long time, sorting through the chaff in terms of dealing with Spanish banks. All the years we've been searching for the right contacts within the banks. Not every bank, not every branch manager is as good as I'm sure you know. Not every person in the bank is as good as someone else. There could be maybe not as competent as someone else. So we spent 15 years finding the right people within the entity in order to make our lives easier, and our lives and now of our clients.
No, I totally agree with what you're saying. With regards to off-plan properties,
yeah.
How does it work when applying for a mortgage on a property that doesn't physically exist?
Yeah, I mean, you can get an agreement in principle, actually, based on your circumstances today. But you must always remember that agreement in principle doesn't last forever. It lasts for 3 or 4 months. So it's, but it's it works as a good guide. You can say, right, if I'm thinking of buying an off-plan property which doesn't complete for 2 years or 2.5 years, as long as my circumstances remain the same or improve, as long as they don't become worse, and as long as we don't have a major issue like coronavirus or something like that, then you can, still need to reapply. But we offer a service where we would hold your hand throughout the whole process. We would be like, for example, I'm closing on a deal in September. A client that approached us 3.5 years ago now, and we got an agreement in principle 3.5 years ago for him. I've been coaching him for the last 6 months to ensure that everything that we needed to do in order for that mortgage to still be valid had been done. It's all fine. So that's part of the set. But we cannot guarantee that, as long as, if a mortgage on an off plan, a lot of things can happen between now and when the build is finished. It's all down to you and your personal circumstances. I think that
if somebody, let's say for instance, they saw a property, it was off plan, they submitted all the details to yourself, you got a pre-approval from the bank, and their personal circumstances did not change, or they may have changed for the better. Let's say for instance their outgoings or their expenditure still remain the same, but their income maybe they've had a new job promotion and they're actually earning more than what they originally stated. Would this give them some peace of mind in the knowledge that as long as nothing politically has changed, and as you said, nothing like the coronavirus has sort of kicked in, that you can still get the same or similar package?
Exactly right. As long as that is, we would guarantee that, yeah, no problem at all. And we would also go to market nearer the time to ensure that the mortgage deal that we have, or the bank that we went to 2 or 3 years ago, is still the best bank forward, because obviously the market changes as well. New players come in, new targets for banks and stuff like that. And again, we've done a lot of pre-work with a lot of off-plan buyers who are coming up to completion. And what we're doing is we're restudying, if you like, the market now. We did the work, got the agreement in principle 2 or 3 years ago, but we're going back to market and seeing what else is out there, just to ensure that they are getting the best product. Yeah, no problem at all. You can assume that if your circumstances are the same or have improved, then the mortgage is going to be available, subject to market conditions.
Great. No, totally. So this is a question that I often get asked. Should you look for a bank if you're going for a Spanish mortgage in Spain, or should you look for a mortgage based in the UK?
There are no UK banks offering mortgages in Spain now. There used to be British banks in Gibraltar, but they left after the credit crunch. I'm talking about banks like Royal Bank of Scotland, Leeds Building Society, Barclays Wealth, that type of thing, but they don't exist anymore. So if you want a mortgage on a Spanish property, the only chance you have of getting one is by talking to a Spanish bank.
And it's as simple as that. There is no sort of if buts or maybes. There's no banks claiming that they can do it from the UK. Sorry, I know this question may seem pretty trivial, but it's one that I often get asked, and
we get it as well. Yeah.
Yeah, I don't know where this has come from. Obviously, you said I mean, how long ago did this all change when
the credit crunch hit?
And that was
in 2008, 2009. The Spanish property prices, took a tumble. The lending was still out there. The British banks had to employ lawyers and stuff, or employ lawyers now to recoup debt that they have, and they realised that it just wasn't worth the investment. That it's better to lend in your own countries because it's easier, it's less complicated. So yeah, so British banks still have a bit of a headache that they still need to deal with, and hence the rules and regulations are just completely different, and the complications of repossessing and stuff like that. It just makes it not worth their while. That's why you only see the big Spanish banks, and that's why it's difficult in Spain anyway. I mean, in the UK, you've got all the four or five major banks. Then you have your secondary market, your buy-to-let lenders, and that that type of thing. There's 3 or 4 different hundred lenders you can approach. Whereas in Spain, really and truly, the choice of lenders is much smaller. You've got 14, 15 lenders that you can really go to. That's it. Sure. One thing I will advise, or will like to point out, a lot of people with properties in the UK think, well, it sounds quite complicated in Spain to get finance. I'll just release it from my property portfolio or my property in the UK. There's nothing to stop you from doing that, and you become a cash buyer in Spain. But there's 2 things that I would like to point out. Is remortgaging in Spain on an unencumbered property for liquidity purposes is almost impossible to do. It's not like in the UK where you can use your house or buy-to-let pretty much like a bit of a cash machine. You can just go to any lender and say, I need to release 50,000 because I want to, invest in another property deal. And that cannot happen. The only way you can actually capital raise is if you have a valid reason. A valid reason is something like home improvements, new kitchen, or extension, or something like that. And you have to document it. So we're finding a lot of people have come unstuck. They bought cash, bringing us up, and they say, "Oh yeah, my house is worth 300,000. I want to raise 100,000." And then we say, "I'm sorry, because I want to send it back to Sweden or Ireland or Britain because I want to invest in my business or whatever." And when we say, "I'm sorry, but you can't do that," they find it difficult to understand because it's not like that. So Spanish properties are pretty illiquid. So we would always say, look, if you've got liquidity in the UK, keep that liquidity there. Purchase with a mortgage in Spain. And if you see within 2 or 3 years you actually don't need the mortgage anymore, everything's all signed, then you can pay it off. You can get rid of the mortgage. That's no problem at all. Another thing, the reason why to consider not sending all your cash from the UK is the exchange rate. At the moment, the pound is not doing so well. The day before the Brexit, the referendum result, I managed to send some sterling over to Spain, and I got 131 euros to the pound. Today, I'm lucky to get 109. So if you're thinking about buying a property worth 200,000 euros, you just do the simple maths. It's quite a lot. So maybe you say, well, look, instead of sending the full 200,000 over, I'll send over half, keep half back. If sterling then rises, then I can then send over that money and win on the exchange rate. So that's another benefit really of getting Spanish mortgage.
Great,
quite useful. And just another benefit while we're talking about it, if people are a little bit worried about the legalities of buying in Spain, let's say they're looking at a property that may be inland, because a lot of our inquiries now are coming in for properties that are inland, like rural, rustic properties. Absolutely fine, but I'm sure everyone would have heard some of the stories. Oh, you know, we did this and the town hall demolished our houses. Getting a bank to co-sponsor or co-invest with you is a very good idea if you're worried about that, because they would do their own due diligence on the property before they agree to lend on it. So if the bank refuses to lend on the property, that should give you a pretty clear idea that it's not correctly registered, and then maybe you shouldn't be buying. So that's quite good.
And roughly what sort of age can you, if you're applying for a mortgage here in Spain, what's the sort of cutoff point before age-wise before they won't consider you?
It's a tough one. I mean, generally, as long as your income is sufficient to service the monthly payments. I mean, there's up to the age of 75, up to the age of 70, you should in theory be able to get a mortgage for 5 years, potentially even 10. That's quite difficult to do because, you know, a mortgage for 5 years or 10 years or 7 years, the monthly payments are quite high, and someone's pension income may not be enough to cover that. So what we try and tend to do, I don't know about you, Ben, but when I bought, I got a house in South London, and I bought that when I was 24. And at the time, I certainly wasn't earning any sort of needs of money. So my dad helped me, and he became a guarantor on my mortgage. What we do now is we turn it on its head, and let's say my dad wanted to buy, he probably wouldn't be able to get a mortgage in Spain, bless him. So I would go on and guarantee him, you know. So I'm 45 years old now, and be able to be able to go on the mortgage in order for mum and dad then to be able to get the finance that they needed in order to buy the property that we want. That's how we get around it. We basically look at bringing family members, younger family members or friends, close friends, into the application to ensure that we can extend them to make it affordable, to make it fit criteria because of the age. Now, kids shouldn't really mind as long as mum and dad they believe mum and dad will be able to pay the monthly payments. I've not yet met anyone that hasn't been the case. But it's interesting. It's a way in which we can get a 5-year term into something like 15, 18 or 20, which makes the whole operation a lot easier to obtain. It all depends on what the clients expect or want to happen. For example, they want to start buying a place now because they think it's a good idea. They think now is a good time to buy, or they just want a holiday home for the whole family. And they have a house in the UK which they're thinking of selling and potentially downsizing because they're going to live half in Spain, half in the UK. Whatever. And when they do that, then they can then pay the mortgage off. You know, if they're expecting a lump sum, fine. Kids generally don't mind sponsoring mum and dad because essentially they're going to be able to use it, and also the grandkids are going to be able to. So it's generally a family purchase. How we look at it. And the Spanish banks have no issues. It works quite well.
Okay. Just had a question come through. If you're a Spanish resident looking for a mortgage, can someone who is not a Spanish resident be the guarantor, i.e. if they're maybe British, American or Irish?
Yeah, it definitely is possible, yeah. You may need to lower the loan to value down a little bit, but not every bank will view it in the same way. There is something which is called a hipotecario non deudor, which can be applied in here, but it needs to be assessed properly. You would be the main applicant. It depends if the main applicant has income or not. If the main applicant, a Spanish resident, has income, demonstrable income, it may not be enough, then a family member can come on to help. But you may need to put a little bit more.
Understood. Would they see that then as more of a liability, and more of a high risk, let's say, sort of mortgage package, or they just view it or deem it exactly the same just based on its merits?
It's based on its merits, 100%. Yeah. It's a bit more complex. Legalities could be a little bit more. It depends on how it can be done, but it's definitely can be done. We've done it before. No problems. The interest rate may be a little bit higher, obviously, because it is a little bit. If you're both Spanish residents, both been living in Spain, paying taxes in Spain for 5, 10 years, 15 years, whatever. There's no question. Spanish residents, you're going to go and get Spanish resident mortgages. If you're bringing in a guarantor from elsewhere, then it's a little bit more complex, a little bit higher risk. You may have to pay a little bit more on the interest rate, and you may have to put a little bit more in terms of deposit.
Understood. So let's say, for instance, obviously Brexit looming, and somebody wants to relocate over here full time. So they decide to actually become a Spanish resident to enable them to get a cheaper mortgage. Would that be, I mean, what sort of package would someone be able to expect? How much cheaper would a resident mortgage be to a non-resident mortgage? And how severely different are the terms? Are they a lot longer, a lot more feasible for people?
It's generally similar. Instead of 20 years being the norm, 25, 30 years would be quite achievable. And your age, interest rates, I mean, I've got an amazing deal today. Spanish residents, young couple, I got 1.25% fixed for 30 years for them. There is an element of life cover in there, but it's their own home. They have 2 small children, so they're quite happy with life cover. And I think it's a good idea that they consider that. I mean, that is amazing. At 1.25, 30 years, but that's pure Spanish resident. I wouldn't be able to get that for a non-resident. So yeah, the term would be a little bit longer. 25, 30 years would be the norm. Yes, you will be able to get better rates. You will be able to get higher loan to values. But one thing I will say, for someone who's thinking of, leaving the UK now and then, making themselves Spanish resident today or tomorrow, in order to qualify, you have to demonstrate that you've been paying tax in Spain for at least 1 year. Most banks will ask for 2 years of tax declaration. So you can't just get a residencia or a green card and expect Spanish banks to give you resident mortgage terms, because you haven't been paying tax in Spain. It's the same for me. I'm a Spanish taxpayer. If I went back to the UK, first thing that a UK lender would ask me is, where do you live and where do you pay your tax? And I'll say, well, I live in Spain, I pay my tax in Spain. So, I know you hold a British passport, but you're not a British resident, unfortunately. And you demonstrate that by paying tax in the country. And generally, 12 months or 18 months or 2 years would be what we're aiming for to qualify that.
Great. We did have another question, which was actually aimed for me regarding capital gains tax. What I will do is I will refer you back, just due to the time, and we were going to do this in 2 sort of separate slots, but we seem to have run over. It's quite an in-depth subject matter. So I'll refer you back to a previous webinar we've done yesterday with the lawyers, with Emount, and they will be able to give you, well, I know that the answer is in that question for you. So have a look on there, and it will go through all the sort of taxes and everything related to buying a property and selling a property abroad. And again, it's just on our YouTube channel, which is Idle Homes International. Just put them in the search bar and it will come up. And it's literally Spanish residency, golden visa and taxes. So it's all the information that you need is on there. But for now, unless Mark, you have anything else that you wish to add?
No, thank you very much, Ben. I really appreciate this. It's been great. Thank you very much.
And you've done a fantastic job simplifying it and really explaining it in quite some detail. So thank you. And thank you. Thank you to everyone who's joined. And if you do have any questions for myself regarding buying a property abroad or mortgages, please use myself and Mark's email addresses, and we'll come back to you as soon as we can. But for now, take care and have a great evening.
Thank you very much. Bye now.
Bye.